Hello guys, what's up? You're watching Simple Crypto News, a one-stop platform to find all the authentic news and predictions about different cryptocurrencies. We are excited to introduce a new series to facilitate newcomers who want to invest in crypto. This series is all about crypto education and investing strategies. Please note that I'm not a financial advisor and these videos are strictly for educational purposes. Therefore, you're responsible for your financial decisions. Cryptocurrency is a hot topic nowadays from an investment perspective, and many tech giants and leading financial institutions around the globe are gradually transitioning to blockchain adoption. As the noise grows and more people become interested in crypto, experienced traders often give newbies a piece of advice to always buy the dip. But what exactly does this mean, and how do you do it? Before we go into this further and find out the answer, we would like to give you a short reminder. If you are new here, subscribe to our YouTube channel and press the notification bell to stay in tune with the crypto market and for more educational videos. So what does buy the dip mean after all? The dip is defined as a sudden and sustained drop in the price of the coin. Buy the dip simply means purchasing an asset after the drop in its price. It is believed that new lower price representing dip is only temporary and the asset value is likely to increase with time. This strategy is much safer to use in a bull market or a stagnant market where the general trend is up or sideways, instead of a bear market where the general trend is down. When you trade any cryptocurrency, there is always a way to inspect the market and trends using some graphical representations. These visual representations help to see the current trend and prices and offer useful indicators to see how your chosen crypto will perform over time. Most platforms like TradingView.com provide Candlestick Charts and they look like this. The Candlestick Chart displays many green and red figures called candles. Each candle often has thin lines protruding above or below it, known as candle wicks. Each candle represents the price range at which an asset was traded for a specific time, which can help you spot the dip. A green candle means that the price has risen since the candle started, whereas the red candle indicates a dip in price. Depending on the time frame that you're looking at, you could identify dips as either one or multiple red candles in succession. The idea is to purchase the asset at the very bottom of the last red candle before the direction reverses and prices start going up again. But the question is, who buys dips normally? Day traders usually buy the dip, and that is how they make their profits. They buy crypto at lower prices and sell higher throughout the day to accumulate profit. On the other hand, long-term investors are not really interested in watching the market every day. They believe in piling up a large amount that will one day be worth a lot in the future. The key is not to invest in a coin that is already pumped up. Instead, purchase every time the price has dipped. Now you must have a question how to spot the dip and how long the dip could go. Well, it is very hard to identify the bottom of the dip correctly. However, you can use many indicators on your trading terminals to spot the dip and estimate how deep a dip could get. Please note that Bitcoin has greater market dominance than altcoins. So if market is crashing, you should also consider reviewing the BTC USD chart even if you don't have BTC. This will help you understand the current market trends. Let's read the Ripple USDT chart to spot the dip. First of all, load the chart and go full screen. Choose the time frame. I will go with 1 day here. You could have 1 second, 1 minute to 45 minutes, 1 hour or even 1 month candles, depending on the level of detail you want to examine. 1 minute candles will reveal a lot more volatility as prices can range a lot within minutes. The higher the time frame, the less movement you'll see as these will display more long-term trends. In the current chart, we need to find the support zone if the price falls. We can see that 85 cents is the strong support zone here. We can also see that price touched its support level on May 22nd and reverted back. Next, we need to enable the EMA indicator. It is abbreviated as exponential moving average and it helps to see any other support zones which are not clearly visible. Let's take the Cardano ADA USDT chart for instance. EMA suggests that if ADA price was to dip more, it would find its next support at around $1.26 range. So here, the safe bet would be to buy the dip at around $1.26 range. Please note that price can still go below this range as other variables are at play, such as liquidations. You can also measure how much drop it would be in price using the measure option. In this example, we can see it is close to a 20% drop. Let's return to our Ripple USDT chart. Our next indicator is the Bollinger Band. In this chart, we can see that we are outside of the volatility chart. Here, buying should be done when prices fall below the cloud and selling when they go above it. The next indicator in our list is RSI, also known as Relative Strength Index. It will show whether your chosen crypto is overbought or underbought. we can see that Ripple goes at the underbought level before spiking up. When merging all these indicators and doing analysis, you will be able to identify dips and also determine if you are at the bottom of the dip in the short term. Now, a new question arises if the trend is reversing and the dip is over. To find that out, we will take the help of the MACD indicator to find if it is predicting a trend reversal. Here you're looking to see if the wave of the red line is shrinking and going to touch the midline. In the current XRP USDT chart, we do not see it, but in the past we can see how the trend reversed and price spiked up. Another way to check it will be to observe the trading volume. If you see a gradual rise in buying volume and a gradual decline in sell volume, it means that the trend is reversing and the price can increase because of more buying. We can take a look at the ADA USDT chart to understand it. Of course, there is no guarantee you are buying at the lowest point of the dip, but at the very least, you know you're not buying at the highest possible price. Like everything in trading, no strategy is going to be one size fits all. We suggest you take the time to evaluate what you can afford to lose and how much time or resources you can dedicate to the market. That's it. We hope you guys enjoyed this video. Subscribe to our YouTube channel for more educational videos and updates about cryptocurrencies. Let us know your feedback and suggestions about the video in the comments section below. We'll see you in the next video. Till then, happy trading.